Okay, we're still in March, and let's go ahead and enter some invoices from our vendors. Alright, this one is from properties, DeCre properties, and that's for our rent. View is 6,000. That's our rent expense, not deposit. We did the deposit before, and that's going to be our March rent. What's going on in terms of debits and credits? Well, we're entering into accounts payable for now. So our liabilities go up. And our rent expense goes up as well. That's it, right? So this amount right here is a debit to account 67,100, and this amount right here is a credit to account 20,000, which is our accounts payable. We have utilities. So here again, it's 6800. Right? Okay. So this is a debit to 68,600 and this is a credit to 20,000. Cleaning. Again, this is janitorial expense, same thing. Just the only thing we're booking into accounts payable, the only thing that changes is the debit portion. Right? The credit is always is driving up our accounts payable. That's it, right? This is our debit to 63,500. This is our credit to 20,000, which is again not shown here, but it's here. There's going to be three parts. So we have workman's comp insurance, health insurance, and dental. Right, so here they are. Accounts payable goes by the entire amount, and then the rest is distributed. Debits and credits are in balance. Each one of this is a debit correspondingly to, this is a debit to 63,370, 63,320, 63,360, and then this is a credit to 20,000, which is not shown here. Prepaid postage. Postage and delivery, same thing. Debits and credits are in balance. You'll always know debits and credits behind these interfaces after you watch these videos, right? And again, why do I do it one after? I want to show the whole bookkeeping cycle, first of all. Second, repetition makes it perfect. Once you get to it enough times, Debits and credits will be in your brain. They'll be imprinted. Bookkeeping software. Okay. Software nowadays is basically that's using subscription. We don't have. Oh, there it is. Yeah, since most of software nowadays is licensing deal on timely basis, so it's all using subscriptions. We subscribe, but again, what's important here are the debits and credits behind it. Right, so again, the 20,000 doesn't change. All of it is going in increasing our accounts payable. Accounts payable is a liability. Liabilities go up when credited. The thing that changes that you've seen is the debit portion. And that's depending on, do we have assets, do we have expenses? So as they change, we change this portion. So 755 is a debit to 62,500, and this 755 is a credit to 20,000. Internet, and we have security, telephone. So let's just punch them in here and show. There it is. Accounts payable goes up by 335. And then we have this bunch of different expenses. Debits and credits are in balance. Each one of these is a debit to corresponding account. 85 is a debit to 68,100. 75 is a debit to 68,200. 175 is a debit to 61,700. 335 is a credit to 20,000. All right. Mobile line. Telephone 920 makes sense. 6810 920 920. We can clear this out. There it is. Right. This is your debit to 68,100. This is your credit to 20,000. And then one more. We're buying more software. All right, makes sense. Getting more employees. Okay, using subscription 62500 1510 1510. All right, so again, this is debit to 62,500. This is credit to 20,000. Good to go. We have a credit memo from our accounting software because we bought quite a few items. They gave us a credit memo. Right? So to do that, we stay in this interface. We just click this little button here, credit, and it reverses just like with credit card. Remember, everything debits and credits are switched up. It's okay. So again, accounting soft, 3 26 2021. Here's our reference, $45. All right, using subscriptions, it reduces a couple of things, right? It reduces our expenses and it reduces our accounts payable. So you see, this is from previous one. Now it's going to reduce because, again, see, previously we booked expense. Now we have a refund. So it goes here, and then this goes here, right? So just like we showed, when we click that button, everything reverses. So this 45 is now a debit to 20,000. And this 45 is now a credit to 62,500. Why? Because credits reduce expenses, and that's what's happening. We reduced our expense from using subscriptions. What else is happening? Debits reduce liabilities. And that's what we did. This 45 is a credit. It reduces accounts payable. They grow less money. All right. So that's that. Date is correct. Save and close. Right. So we're done booking invoices from our vendors. We're done booking credit memos from them. Now we have to pay them. So let's go ahead and pay them. All right. So let's go ahead and get started. So here it is, our 6,000. All right, let's assign check numbers manually for kicks and giggles. So again, at this point, if you remember, only these two accounts will be impacted. We already booked all the expenses. So now what we'll be doing is we'll be reducing the accounts payable and reducing our bank account, right? Because we take money from the bank account, which is an asset, so it has to be credited, and we pay down the amount of money we owe, right? And that has to be debited because it's liability, and liabilities are reduced by debit. So let's go ahead and do that. Actually, let's see if we can do. Oh no, the dates are different. The dates are different. Okay, so here it is. Check. Create. So here's the date. 3/8/2021. They select. Okay. Assign check. 15. So what's happening here? All right, reducing bank account, right, and reducing liability. That's it. That's what we're doing here. Okay. Payment summary. So this 6,000 is a debit to 20,000 and a credit to 10,100, right? And it's right here, 10,100. Accounts payable again is not shown, but it's implied. Okay, pay more bills. So 311. So we have these two on 311. Let's see if we can do them together. So we have Tri-County Utilities. And we have Keep It Clean. And we paid them on 311. All right, here they are. So this one is 1017, and this 1016. All right, so what's going to happen here is, right, same thing. We could combine it. Right, that's it. So these amounts, they're credits to our bank account because bank account is an asset and it is reduced when credited. And these amounts, same amounts, are debits to our accounts payable because it's a liability. A liability is reduced when debited. Now, here they are. They're impacting our bank account. You can see it right here. Same on bill. All right. Oh. Mhm. Okay, next we have insurance. All right. Let's make sure we get the date correctly. Okay, check 1018. So again, what's happening here? We're reducing our accounts payable. 20,000 is going to go down, and our bank account will be reduced. All right. So again, debits and credits. There are right here in balance. Here's that payment again. Again, this amount right here will be credited to account 10,100, thus reducing it because it's an asset. And that amount will also impact our accounts payable, which is a liability, and will be reduced as well because once we debit liability, it goes down. All right, paying more bills. What else we have? We have the 45 prepaid postage. Okay. 13th. 13th, here it is. Pay selected, same thing. Right? Okay. So here it is, $45. Again, please note, none of the expense accounts are impacted on the accounts payable and the account that we're using to pay accounts payable. In this case, it's our bank account. So here it is. Okay, what else is there? Accounting soft. Did we pay those on different days? Yeah, 26, 24th. Okay, all right, that's fine. Okay, 24th. Pay selected. There it is. Assign check number. We could print the check right here. I'll show you in a second. Doesn't make a difference. Okay, so there it is. There it is. Pay more bills. Let's do this one as a print. Makes no difference. Here it is. Printed. Bills. Okay. Print checks. Just need to enter that correctly. 1022. Okay, so again, the only difference is the sequence because we got to print the check. But here it is. Once it prints, it will credit account 10,100 and debit accounts payable 20,000. Okay, so here it is. We can print it. Da-da. Okay, the check printed correctly. We're good to go. All right. So let's see, more bills. Okay, bills, we have two more left, right? So here it is for mobile services. Let's clear it up. Again, to be printed versus assigned checks. Not much difference as you just saw. It's just the sequence. One prints, one assumes we already printed it. Okay, 1021, same thing. All we're doing is we're reducing accounts payable and we're reducing our balance in our bank account because that's what we use to pay. Here it is. Right, 920, impacting our bank account, credits it to reduce and reduces our accounts payable. And last one. Let's see, where is it? Right here. Tri-County Cable. Yep, all good. Date 28. Ta-da. Pay selected. There it is. 1023. We're done. So again, when we pay invoices that we previously entered, we do not impact expense. We do not impact asset accounts. All we're impacting is accounts payable and the source of funds. If we paid it with a credit card, we would essentially reduce one liability and increase another. In this case, we're paying it with our bank account, so we reduce liability and reduce our bank account balance. All right, here it is. We're done. No more bills to pay. We're done with our bills for the month of March. And now what we have to do is reconcile March and see if we did everything correctly.